Today I'm going to be talking about my views on central bank digital currencies and why I feel they could be the final nail in the coffin of financial freedom for the general public, and how it could be utilised to monitor and restrict people in their spending. To get to this point though, we need to understand how a cryptocurrency works. A cryptocurrency runs on a blockchain, and a blockchain is effectively a incorruptible online ledger where every transaction is logged. So if we went to a moneyless society and every transaction is then on the blockchain, everything you spend can be monitored and it can all be categorized. You could be spending X amount on alcohol, or what the government then deems a unnecessary purchase. We could even go down the road and say, alright, you spent $100 or pounds or whatever the currency is this month on alcohol. We deem any more as unhealthy or bad for your health, for your own good. We're going to stop you from using any more currency on that. Cryptocurrencies are programmable money, so though it would not be easy to implement all that, I think it is something that could be done. And honestly, that is terrifying if it were to go down that route. So let's have a look at the countries that are looking into it at the moment. I'll put the links to all these in the description below, but here's the map I've come across, which is showing the status of which countries are up to which points. As you can see, we've already got 11 launched. Now, none of these are countries with a massive GDP at the moment, so it's pretty much, this is effectively the smaller ones trying it. All the ones in pilot here, these are testing effectively at the moment, seeing how they're getting on with it. And here you can see all the ones in development. I mean, between them all, you've got all of the major players in the world economy looking into this. If we highlight them all again, there's very few. I mean, look where isn't doing it. I mean, probably 70-80% of the world now is looking into this. So that's got to tell you how seriously they are thinking that the central bank digital coin will be useful to the governments. Now, cryptocurrency was supposed to be a low transaction, low fee alternative to traditional finance. I don't think for a second banks are going to all of a sudden be happy with going from the 2.5% they get per transaction to maybe 1 or 2 cents on a £1 million transaction. I've seen someone send $32 million worth of BCH, which took 6 seconds and cost 2 cents. Think how much that transaction would make a bank by the time they've got it from one person to another. It would take days to do. It's so inconvenient, the old monetary system, but that's a story for another time. We could bang on about that one all day. Let's move on to the UK's central bank digital currency max allowance. So here they're already saying you will only be able to have X amount of a Bitcoin. Very original thinking there. Bitcoin. So again, this is another control measure. They're kind of effectively saying you can only have 10,000 or £20,000 worth of savings. I'm not even too sure why they'd come up with this. Right, what's their thinking? What's their angle on this? You can only have 20,000 of this. Is this, so say we go fully into the CBDC, which has got to be their end goal. Why would they only allow you to have £20,000 worth of savings? What's the reasoning behind that? I'm not too sure. My takeaway from this is I think that it's extremely important for the general public to try to educate themselves on blockchain technology. so they can greatly understand the possible impacts that a central bank digital currency could have on them. I'm a massive advocate for cryptocurrencies in their true form and how it was supposed to go, but in an ironic twist of fate, the idea could end up being the final nail in the coffin for financial freedom. I'd be fascinated to know what your views are on this. Please comment below or reach out to me and we'll discuss it. Thank you.